Our next guest says the market's fueled by, quote, persistent limited supply that is falling short of current demand. Here to discuss, one of the largest U.S. home builders, Tri Pointe Homes CEO Doug Bauer. Doug, it is always good to get your take. Thanks for the time this morning.
Thanks, Carl. Good morning.
I thought we were getting into an area where completions were ticking up a little bit. Worker availability wasn't at least getting any worse. Are you seeing any sort of moderation in those trends?
No, not really. I mean, we still saw a very strong second quarter, continue to see a very steady July. Carl, I kind of look at it in three different views, three different data points. Number one, the consumer has really adjusted to the new normal, and that's interest mortgage rates in the mid sixes, the low sevens. Our buyers through our mortgage company affiliate enjoyed rates of 5.8% in the second quarter. The second thing is it's pretty amazing how strong the income levels are for the millennial and Gen Zs. In our buyer profile through our mortgage company, over 2/3 are millennials and Gen Zs, and they're making combined income of $193,000, a loan to value of 82%. So very, very healthy down payments. And then the third point, as you mentioned, is it's really a non-existent resale market. That's usually our biggest competitor. I think the National Association of Realtors reported that 85% of households are locked in at or below 5%. And actually, if you look at the data right now, the new home builders market share has gone from about 13% up to 33%. So everything's lined up for a continued healthy housing market.
So tactically, in the meantime, how do you navigate? I see some reports talking about your diversification of geography, maybe moving into the entry-level first mover up market, some of those products.
Well, we several years ago focused more on the entry-level premium first move up, but it's a great question. And as we noted, as long as rates stay at these levels, I frankly think our industry is poised for this next cycle. I mean, there will be some macroeconomic speed bumps that will be out of our control. But at Tri Pointe, we're looking to grow both organically and possibly through M&A to increase our scale. We're looking at further expansion in the Southeast and the Northwest. And we think it's a perfect time to grow our business. We have a very strong team and culture to do that.
Newly constructed homes make up about a third of inventory today, compared with the historical average of about 13%. To your point, current homeowners don't want to move out. They don't want to forego what's now deemed to be relatively cushy interest rates. How long do you see this imbalance continuing? And what's kind of the catalyst that could cause it to flip? Is it just, once mortgage rates do start to go downward?
Leslie, it's a good question. I keep debating that with my partner, Tom Mitchell. Right now, I continue to believe rates will stay elevated. I think the inflation component's a little bit more sticky. Obviously, if rates went back down to sub 5% levels, that would free up more competition in the resale market. But conversely, it would also afford the buyers even better interest rates than they're seeing today. So it's a good question. As I mentioned earlier, I think as long as rates are where they are today, the home building industry has all the tools necessary to make housing very attainable.